everyone, welcome. You're tuned into Closing Trades right here on ET Now. I'm Shrishti Sharma and with me Snehisha, and the markets have clearly shrugged off all the worries regarding the tariff implications because for now the markets are holding steady and a very good recovery from those days lowest point, and so is the case for Nifty Bank as well, which is standing tall and recovered quite sharply and trading in the green right now. But there are a lot of earnings that are trickling in, and the latest of course is Sun Pharma, wherein this time around we have seen a decent set rather coming in from Sun Pharma. If we talk about the revenue figure, that has seen a surge of almost 10% on a YY basis, in line to what we were expecting in. The net profit has come in at 2,279 crores, but do remember or do mark that there is an exceptional loss of 818 crores this time around, which must have dented the profit figure of the company. Operationally as well, EBITDA is almost in line, a bit of a mild uptick versus the estimates, or rather a beat versus the estimate is what we have seen. 4,007 crores is what the company has clocked in, and so is the case for margins as well, at 29.1%. So a decent set coming in from Sun Pharma, of course. But let's look at the internals then. The US formulation sales has been registered at $473 million. That's a jump of 1.4%. Indian formulation sales, that has seen a double-digit growth at 14% this time around, because do remember that for Sun Pharma, the domestic business was indeed doing very well. What will happen to the tariff and the implication, that was the key monitorable. The domestic formulation growth was actually expected at 11.5%, and the company has done very much better with respect to that. The emerging market sales have also seen a jump of 5%. Rest of the world growth number is 5.5%. And we also have comments coming in from Dilip Sanghvi, who's the chairman and managing director of the company, saying that the India continues to show the strong growth momentum, contributing meaningfully to the performance. The US launch of Lexelvi represents an important step forward, offering a new treatment option for the patients. And along with that, Lexelvi augments our portfolio in dermatology and adds a growth engine in the innovative medicine business. So the specialty sales have already been doing very well for the company, and we are seeing that good numbers indeed coming in from Sun Pharma as well. So all in all, nothing much to complain when it comes to Sun Pharma, rather, Sneh.
Oh, absolutely. You know, Sun Pharma, good set of numbers, except PAT looks a little bit of a miss, but margins are looking beat, revenues looking in line. So not much to complain when it comes about Sun Pharma. Let's just see what the stock is up to right now, because it's a mixed set of numbers coming in largely. So let's just pull up the stock and take a look at what Sun Pharma is up to right now. Okay, a little bit of a pressure post those numbers coming in. 1% cut is what we've seen. But while we're talking about earnings reactions, take a look at what HUL is doing, right? Single-handedly taking the Nifty higher today. It's a 4% uptick coming in on HUL as we speak. Good set of numbers coming in from HUL. Volume growth is at 4%. Revenue also on the consolidated basis, revenue and PAT look to be a slight beat. Otherwise, EBITDA and EBITDA margins are largely in line with our expectations. So at least that's the take on HUL. Another earnings candidate that's doing phenomenally well for itself is Emami. Once again, from the entire FMCG pack, Emami is up 6.5%, slightly more than that as we speak. Good set of numbers coming in, although flat on a year-on-year basis, they were still much better than what the street was expecting. So good numbers coming in on that front as well. But well, yes, let's also once again take a look at the market, and what's doing well is a couple of these FMCG names, but you also have Geo Financial. Eternal is doing well, once again picking up in trade. You have JSW Steel, Kotak Bank, ITC, all of them doing well. While we are talking about earnings reactions, and we also interacted with M&M earlier today, from childhood memories to corporate milestones, Rajesh Jejurikar opens up in an exclusive conversation, congratulating his brother on entering the CEO big league. Don't miss this heartwarming snippet of sibling pride and success. Full chat coming up at 7:30 p.m. only on ET Now, but here's a slice for now.
Yeah, of course, one can only be happy about this, Aisha. So, you know, Procter & Gamble is one of those companies which has always been very aspirational for all of us coming out of B school and so on and so forth. So, to get into a company like that, and then in India, and then to work your way up to become the CEO in January 26, I think is something we all as of his family feel really good about. But also I think every Indian today, as we are picking up from the sentiment, is really feeling proud that an Indian could get there.
Absolutely. But what's it with the brothers? What's been the magic sauce? M&M, P&G, any more? Or just the two of you?
We're just two of us.
Okay. No, but really, what were the growing up years like? I really wanted to understand. How is it that two brothers here from India reached that kind of milestone, M&M and of course P&G?
So, I think there's no one answer to
Of
this,
course.
right? But if one was to think about what is it that the growing up years bring to us,
Yeah.
and I would kind of underline 2-3 things. And I'm saying this more because, I think we are now at a stage in our life where many young people can learn out of what we've gone through. And especially I see today's generation being so obsessed and parents being so obsessed with academics.
All right, so definitely stay tuned for that interesting chat coming up for you all. But other than that, if you look at some of the other earnings that are trickling in, on the bottom of your screen, you see Vedanta numbers are also out. If you look at the profit figure, then there seem to be a jump, wherein if we talk about the revenue figure as well, then the company has definitely clocked in a decent set for this time around. As of now, we are seeing that the Vedanta stock is down almost 0.8%. So definitely an earning reaction trickling in terms of the profit. There's actually a dip of almost 8.5%, while the consolidated revenue has also seen a decline of 6.5% on a quarter-on-quarter basis. So that's the set coming in on Vedanta as of now. And definitely we will get to see more management commentaries from this as well. But yes, that's about Vedanta numbers. But Snehi, definitely HUL, like you have been talking about as well, the company has done very well, and especially their guidance with respect to the gross margin front as well.
Absolutely, Shashi. What's key to note is that last quarter they had reduced their guidance from a band of 23 to 24% to 22 to 23%. So that was a little bit of a cut we saw last quarter, but this time they have maintained those margin guidance numbers. And when we interacted with them earlier in the day, they also said that they're now feeling a little bit more confident in terms of where the margins are heading, because now you are seeing some softness in commodity prices. Cost pressures are coming down. They have already started to pass on the cost benefits to the customers. So that is sounding very upbeat from the management. And in fact, they also said that if the cost on the raw material front continues to be where it is now, we can expect to see not much of a pricing action coming in, and that pricing action would continue to be in low single digit if the commodity prices manage to stay where they are. They've also said that the first half of FY26 is already shaping up to be better than the second half of FY25 because they have undertaken portfolio transformation and macros are also solidifying and looking good. So that's another tailwind they've pointed out. In terms of the management commentary, they also said that the HUL ice cream business demerger should be culminated by Q4 of this financial year. That's Q4 FY26. So a beat management commentary coming in. Margin guidance has been kept intact. They've said that they're expecting commodity prices to now cool off from here on, and their focus is going to be on competitive-led volume growth. In fact, I managed to interact with the management of HUL earlier in the day. Mr. Rohit Java, MD, CEO, and Mr. Ritesh Tiwari, who is CFO. Here's a slice of that conversation I had with them.
The growth is price driven because there's been a lot of inflation, so we had to price up. That means the grammage goes down on the average usage. There is some impact on volume in the near term, but on the whole, we believe, and our margins are also up. So on the whole, the P&L is looking quite robust, and we will stay on this path of effectively taking our portfolio more and more towards the premium end, more liquids, more premium, which is the nature of the game in personal care.
You spoke about price hikes and grammage, reductions. Now that we are seeing a little bit of a cool off in commodity costs, are there going to be any revisions in terms of pricing or grammage on either side?
We have started passing on already in tea prices. So sequentially, even June quarter, we had reduced prices in many pack prices. and which is why I had mentioned earlier the price versus cost gap in this quarter, because we have in the price to replacement and not price to consumption. Second, for skin cleansing, this is an area we had seen material inflation coming in, and hence there has been price increase which has got taken, including in the current quarter. But going forward, as we see now that inflation for palm and palm derivative has now stalled where it was, and there's some coming off recently. We don't expect further change to happen in skin cleansing. But year on year, there is inflation, and hence year on year there is price. Coming to laundry, it's other way around. We have seen crude oil overall and crude oil basket for last year or year and a half in a deflation scenario, and hence we have passed on the benefit to a consumer. No change by and large in this quarter. Whatever change you see in terms of negative price in this quarter is coming from the decisions we took because of passing on the benefit of deflation to consumers, and also the price change that we did reacting to competition.
Hi there, welcome back to Closing Trades. Markets are still managing to hold on to a little bit of a tinge of green, if you could call it that, but we are very comfortably above the 24,800 mark, and in fact now we've even surpassed 24,850. So good spike up coming in on the Nifty. Not bad for the kind of reaction that we saw in the morning and how quickly we were able to reverse that over the course of the trading day, and we still have about 40 minutes of trade left, so at least looking good on that front. But let's interact with some of our experts on the show right now to try and get a sense of where our markets could be headed from here. We have Dhananjay Sinha, co-head of equities at Systematics Group, joining us on the show. And Dhananjay, hi, good afternoon. Thanks so much for joining us. Give us a sense of the kind of market move we're seeing, you know, so many days in a slump. And the day where we're hit with the actual tariff number, speculation was built throughout and we were in a slump. But the day we get clarity, even though it's a 25% number, the markets have, you know, taken it very well, taken it on the chin, and they've, you know, just been up and away. So what's your take on the market today? And do you believe now this could be the move going ahead where we see some positivity? Is that here to stay?
So I think the market has been fairly lackluster after the initial rebound from the the April lows and stuff. So if you look at last month and a half, I think it has been fairly lackluster with a drift downwards. I think hence I would say the news about the US tariff was also in a way kind of priced in, because this uncertainty on the global trade front was actually building up. And I think when the announcement came with the 25% tariff and additional sort of penalty as well, I think the market really at least reacted in a way that a lot of this was priced in, and hence the initial reaction to the news essentially translated into some comfort that least one knows that this is the worst case scenario that one can look at. So I think it's an unwinding of the stress that's been there. I think the underlying thing for the market is to really look at the earnings trajectory that has been panning out. And if you look at the broader context of various industries that have actually announced results, it does look to be a fairly modest performance. So we'll have to see whether the outlook in the coming quarters sort of improves or not. I think the communication from the management has been sort of mixed, but by and large, it still doesn't give us a sense that a major rebound in earnings can happen anytime soon.
Well, indeed, the long term will depend on the earnings, and that's where you should take the call on. And a lot of earnings that will be underway even in today's trading session. We'll talk all of that. But before that, let me welcome Akshay Bhagwat, Senior Vice President, Derivative Research at JM Financial, joining us on the show. Hi Akshay, good afternoon, and great moves rather on the markets with respect to the recovery. But believe that in the last half an hour or so, we are getting to see a lot of this expiry action also in play. What's the understanding on the index level, Akshay, right now?
Yeah. So good afternoon. As you saw on Tuesday, you had the Sensex expiry, and today is the monthly expiry for Nifty. So both these days have been kind of days where volatility has caught the street by surprise, because July was a month where volatility was tamed on the weekly expiry day. So last couple of expiries for the indices have seen large moves. So today, despite of a negative price sentiment which we started the day, the markets have given a thumbs up reaction, and we are trying to kind of again get about the psychological 25,000 mark. So yes, if we were to approach the August series, the first caveat or the condition is that the markets should manage to sustain about 25,000, because this is expiry. So expiry days sometimes moves can take you on the wrong foot. So it is best that we first see the rollover data. As of now, rollovers are in line, longs are being slowly added in today's trading action. But once price confirms that it settles about 25,000 tomorrow, that will be the first signal that possibly markets have formed a bottom at around 24,700 750 zone, and that the momentum should see the markets once again getting to levels of 25,500 plus.
25,500, so sounding optimistic on that front. Akshay, but Dhananjay, I want to get your sense on the kind of numbers that we've seen coming in from big companies today. You have numbers from Sun Pharma, HUL. Sun Pharma seems mixed, but HUL largely good set of numbers coming in. What's your take on both of these numbers? If you could tell us what you're making of the management commentaries.
So I think for HUL it's been slightly above expectation. The volume growth we were expecting about 3.5 at the standalone basis. It came around 4%. So that is something that you know people believe that there is some bottoming out that seems to be happening, and I think the management also is talking about a scenario where the first half of this year could be better than the second half last year. So I think that is the message that has been taken from the management commentary, and also the fact that the stock has been languishing, underperforming for quite some time. So I think together with the management commentary and management change uh, that has happened recently, there has been just a change in leadership out there. So expectations are building up for a better quarters going forward. So that is one. I think they are also talking about a sort of a beneficial cost scenario, and the fact that they would want to focus on premiumization and a profitable sort of growth as far as volume is concerned. So I think all those things are being considered when the if you look at the stock response that we've seen. It's quite a significant uptick that we have seen for HUL.
All right, indeed, that's the day coming in on HUL. But other than that, Akshay, a lot of these chemical counters, well, of course, on the back of this tariff announcements, they have been reeling under pressure. And I see that one of the biggest losers, rather, within the F&O space is Aarti Industries. If you can help us with a chart check on this particular stock.
Yeah. So for Aarti Industries, yes, today's the news has taken a toll on these names. And if you look at the chart structure, the charts have been in a medium-term weakness. The charts have signaled that 460, 470 is a very massive resistance, and multiple times, I think, in the past few months, there have been failures at the levels of 460, which has then resulted in a steep fall in this trend. So there's a negative chart structure which is evident. There is a small support at 400, but I believe it's better to wait and watch, because still the major supports in the stock, as I see, lie somewhere around the levels of 360 to 370.
Okay, so that's the take on Aarti Industry and some of those other chemical names that are deeply impacted in today's trading session. Like my colleague Sharad was highlighting earlier, some names like Vinati Organics, Aarti Industries, Deepak Fertilizer, Deepak Nitrite, they all could and are in focus on the back of this tariff news flow coming in. But Dhananjay, before we let you go, what is the sentiment sense that you're getting from the market right now? Because a little bit of a positivity is what we've seen. after the initial first leg of the earnings disappointment that we've seen, the numbers that we've seen this week largely are good, both from the Nifty and non-Nifty 50 group of stocks. Do you believe that now the sentiment is improving, and maybe we spoke about how the markets could react in the near to medium term, but what's your take on how the remainder of the earnings season could go?
So I think it'll be too early to really conclude on a week-to-week basis, how things pan out. So we can't really take a holistic view based on what has happened in this last few days. By and large, there has been sort of a lackluster performance as far as the earnings season is concerned. We'll have to see whether I think there is a good amount of space that is still need to be covered in this current earning season, and it will be very premature to really judge that whatever we have seen heard this quarter. And I think even the positive news is not really very very compelling. It's not a significant rebound, even if you consider HUL and a few other names. There is a sort of modest upturn that is there. We'll have to see whether this can continue for the rest of the earning season or not. I would say in the current quarter, I think the macro data with respect to the credit growth, also whatever we are seeing from the banking sector, it's been fairly modest. And so I think the lead indicators are not very robust. So I would say rest of the earnings will need to be careful about before concluding for the entire season. I think beyond this quarter, people will start, or market will start looking for what is the guidance for the second half, and whether the festival season that are coming up will be better or not. So I think those are the things that we'll need to see. Auto sector, we've seen there has been inventory built up and all. Whether there is more discounts out there, what is happening to the MFIs, NPFC sector, all those things will need to be looked at. I think the expectations on the earnings is very modest. I would say if there are positive surprise that can happen if the commodity prices come down, some margin expansion happens in consumer-oriented sectors, I think that can translate into certain positive surprises going forward.
Okay, Dhananjay, appreciate you joining us and sharing your view with us. On that note, we'll let you go. Akshay, before we come to you for your stock-specific recommendations, let's throw the spotlight on JSW Steel. We are getting word right now that the Supreme Court is hearing review pleas against judgment quashing JSW Steel's resolution plan for Bhushan Power and Steel. It's a positive coming in for the stock, but a very mild spike up is what the stock has seen. If we can have the stock price again on the screen, a 1.5% uptick is what we are seeing when it comes to the stock. And you have Tushar Mehta, who's appealing on behalf of the COC. He's saying that the court has interfered with the commercial wisdom of the COC. The courts cannot interfere with the decision. There was initially an apprehension on whether JSW was competent for this. It was not pressed upon. In the judgment, there are findings after finding with regard to this. The matter is listed for hearing on Thursday next week. That's August 7. So, well, that's the verdict coming in as of now. It's not the verdict, but that's the latest that we're getting from the Supreme Court, wherein they're saying that this is a fit case wherein judgment under review needs to be recalled and it is a matter to be considered afresh. Very positive comments coming in favor of JSW Steel. That stock is seeing a little bit of an uptick right now. But Akshay, we have numbers of Maruti flashing on the bottom of the screen. Before that, Akshay, share with us your stock-specific ideas.
Yeah, so a couple of stocks on the buy side. I have first is Larsen and Toubro, which is buy. Very excellent set of numbers, which we saw day before yesterday. And after that, we saw very strong market reaction post the results, a strong gap up. Today, because of the overall market breadth in the morning, we have seen a slight dip in Larsen. So that makes it a lucrative buy at the current rate. For a possible upside trading target till 3,800, you can maintain a stop loss of 3,592 on this trade. Second trade is in Eternal. So Eternal Limited recently has seen a very strong up move, and after that up move, we have seen a slight correction or a consolidation with the stock prices retracing back to the support zones of 300 to 305. So I believe the momentum will catch up soon, and you might see Eternal getting back to levels of 325. So that's the target area you can work with. Keep a stop loss of 299 on this trade.
All right, those are the picks from Akshay, but a lot of earnings trickling in the auto major. Maruti Suzuki did come out with its numbers in a very good set of numbers rather coming in, and a big beat on the profit is what the company has registered versus our expectation of close to 3,087 crores. The company has clocked in 3,711 crores on the profit figure, so definitely a big beat on this particular number especially. And if we talk about the operational performance, that too is boring in line to our estimates, while there's a slight beat on the EBITDA number. If we talk about the EBITDA, that has come in at 3,996 crores versus our expectation of close to 3,800 crores, while the margins are steady at 10%. Do remember that on a YOY basis, we were already penciling in that the margins will take a bit of a decline on the back of the higher promotional cost and the back of the mix that the company will be having this time around maybe, and given the fact that the volume jump on a YOY basis was just 1%. So on the back of this, the EBITDA was expected to be close to that 10% mark. Other than that, the revenue number that has come in at 414 odd crores, a slight bit better, our estimates as well. So good set rather coming in from Maruti Suzuki. Deven, hi, good afternoon and great to be speaking with you. And Deven, your first take on Maruti Suzuki numbers, though the margins are flat if we compare the margin figures sequentially, but a big beat rather on the profit figure. How do you believe the stock is expected to do?
Yes, I think the beat on the profit figure seems to be a one-off, and I think one needs to look at, that one-off item to get a real good handle on that particular subject. I think at this point of time, the details are not available in front of me. But certainly, I think if it is a one-off, then interpretation is required on that number. Margins on EBITDA front, I think, has remained subdued as expected. Maybe I think the newer models probably are taking toll on margins largely because of the fact that I think the promotional part of the pricing is definitely, I think, compelling them rather compromise some part of the margin to get the market share. But overall, I think this is a good start, at least in the first quarter. Maybe I think the second half could possibly go much better with the kind of money that the consumer is likely to spend, given the kind of purchasing power that has come to them because of the tax saving in their hands and the lower cost of funds.
All right, so that's the first take on the numbers. But yes, Deven, you're right that there is indeed a one-off where the other income has actually seen a good jump on a YY as also on a sequential basis. What I can see that the other income is over 1,800 crores and that's a significant jump, almost double the number on a YY basis and sequentially as well, a good uptick over there. And because of the one-off, we are seeing a beat on the profit figure as well. But Deven, if one really has to look at the pecking order with respect to the passenger vehicle companies, what your pecking order will be like, given the fact that the M&M has delivered a decent set, while for Maruti Suzuki as well, no major disappointments rather, while for Tata Motors, they have announced a big deal today.
Well, I think the SUV segment within the passenger vehicles is definitely the one which is producing the better margins. And going forward, we believe that even the first-time buyers with a lower cost of interest fund available to them may probably want to go for, instead of entry-level cars, go for the SUVs in respective categories. So I think the likely performance of most of the passenger vehicle companies, I think, is going to be better in the second, third, fourth quarter. Also, the fact that the cost is under control and as a result of which margins are appearing better or promising to be better in given situation in this coming quarters. So we remain relatively more optimistic about the possibilities going forward. And should the export-related activity picks up, or it shows visibility to pick up, my take is that some of these companies would relatively price themselves better in the listed environment.
So that's your take on the pecking order within the auto space. But just want to get a little bit more sense on the kind of profit number we've seen both from M&M, from Maruti. It's a beat versus estimates. The upcoming festive season is also just around the corner. Do you believe that the auto sector is now, we can now expect some steady moves coming in from the auto space?
Indeed, I think you're absolutely right. In this festive season, with the higher amount of money available for discretionary spending, certainly, I believe that I think the numbers will appear better, particularly for the premiumization strategy that most of the passenger vehicle companies have been following. I think for them it's going to be better. M&M clearly looks winner in this because I think they have got a good pipeline to execute with the higher amount of bookings that they have done, including in their born electric vehicles that they have launched. So from a perspective of looking at companies, I think M&M certainly remains, I think, more visible, more clear. Tata Motors, Maruti, both in particular, I think would be driven by the rural spending. Of course, Maruti has got a premiumization in the portfolio now with a good segment of hybrids. So from that perspective, they should be also showing relatively better performance. But surprise package could be Tata Motors if they end up selling more volume.
But Devin, with this, we'd like to thank you for taking the time out and speaking with us and helping us with the first take on Maruti Suzuki. So Maruti Suzuki trading flat as of now, but a mild uptick after that surprise coming in on the profit figure. But time now to slip into a very short break. Don't go anywhere. We'll be right back with lots more on the other side. Welcome back to Closing Trades right here on ET Now and taking a look at the markets. Yes, of course, we are a little bit off the day's highest point. As of now, Nifty Bank is once again in the red with almost 200 points of cut, while Nifty 50, that index too, is down almost 100 points. But if we look at the recovery, that's been quite good from the day's lowest point. So believe that some bit of an expiry action is also trickling in. But for this, let me also welcome on board Mayuresh Joshi, head of equities with us. Mayuresh, firstly, help us with the sectors that you believe are looking good in this market as well, given the fact that we have a lot of these FMCG companies rather today, which have come out with very good set of numbers. Look at the numbers from HUL, Imami and now Dabur. What's been your take on the FMCG pack?
No, again, I think the whole sense that we are getting is that consumption as a basket should show significant signs of improvement as we head into the second half. And specifically so because of expectations of better volume growth, input costs have started becoming very, very benign. And a combination of both these factors will lead to a huge operating leverage. Obviously, I think what you've probably seen in terms of numbers so far, they will show increasing and improving trend as we head into the second half. And therefore, I think our own sense is as demand comes back, both in terms of urban and rural areas, because of better consumption patterns expected to come through, because of tax cuts, because of better monsoons, that leverage will pay out on balance sheets. Again, I think rural is going to be a very integral and important part for a lot of these FMCG companies because 60% of their sales and volumes actually comes in from semi-urban and rural areas. And therefore, I think FMCG companies' numbers should be on track. Second half recovery is something that the street is probably believing should come through very, very strongly. So I think stocks like Marico is something that we continue holding within the entire pack in the FMCG space as we speak. Generally, I think we will watch out for stocks like a Dabur as an example, which has just come out with numbers, or even something like a Tata Consumer.
Okay, so that's the take on the entire FMCG space. While we're talking about FMCG, just want to once again revisit the numbers that have come in from Dabur this time around. And in fact, it's been a mixed set of numbers is what you can call from Dabur this time. Because if you take a look at how their numbers have been on a consolidated year-on-year basis, revenue is up 1.7% on a year-on-year basis at 3,405 crore rupees. And in fact, it's in line, absolutely in line with our poll over here. The net profit has come in at 514 crores. It's a big beat compared to our poll of just 490 crore rupees. It's 5% higher than what we were expecting and a jump of 2.8% on a year-on-year basis. So good numbers coming in on the net profit front. EBITDA is also at 668 crores. There's about up 2% and it's slightly higher than our estimates as well. And net margins are the real show stealer when it comes to Dabur because the street was estimating 19.1%. The margins have come in at 19.6% this time around, unchanged on a year-on-year basis. But that is in fact the beauty of the margin because we were expecting some pressure here in line with all FMCG companies, but the margins have actually maintained themselves and they've actually remained steady. So that is why the stock is doing pretty well. Even when the update had come out in about 2 or 3 weeks ago, they had said that the HPC segment is expected to do well. Beverages were impacted by unseasonal rains, but they are also diversifying portfolio there. Remember that day when the stock, when those updates did come up, the stock was up 4%, and the stock continues to gain today, also up about 1.25% as we speak. But Akshay, give us a chart check on Dabur. What is Dabur looking like on the charts to you? Any strength you're seeing here? Because fundamentally, it's shaping up to be quite all right. On the charts, what are you seeing?
Yeah, so initially, what I see is there's a positive reaction to the results, but there is a very strong resistance if you're a short-term trader trying to time this buying momentum. The resistance is placed at the levels of 535. So yes, maybe still 5 to 7 rupees of upside is due in terms of a BTST trade, but there is where the key resistance lies from a short-term trading perspective. There is a good support zone built at 510. So the sense initially is 510, 535. That is the trading range the stock can be confined in for the next 7 to 10 trading sessions. Only post a breakout above 540, then we review whether the next leg of up move continues or not.
The day coming in on Dabur, the stock holding on to the gains of over 1%, but it's indeed an earnings heavy day on D Street, wherein Coal India is one of the other candidates where lower dispatches could offset the benefits from higher e-auction premiums and realizations. Let's go across to Ashesha, who is joining us to tell us what to expect from Coal India. Ashesha.
Well, yes, we are expecting weak set of numbers from Coal India this time around. Offtake was on the lower side on a year-on-year basis, and that is likely to weigh Coal India's numbers. But remember, e-auction premiums and e-auction realizations are likely to be higher, and that will partially offset the impact of lower volumes in the quarter gone by. As far as numbers are concerned, consolidated revenue could come in at about 34,800 crores, which will be a decline of about 4% on a year-on-year basis, and margins could come in at 30% versus 39% that the company had reported in the previous same time last year. Now, as far as numbers are concerned, as I said, volumes are on the lower side. Company has reported dispatches at about 190 million tons, which is a decline of about 4.5% on year-on-year basis. So that is likely to weigh heavy on numbers. But e-auction realizations and premiums are likely to be higher. So we expect e-auction realizations to inch higher by as much as 8 to 10% on a year-on-year basis, and premiums could likely inch higher by about 4 to 5 odd percent. All eyes will be on management commentary with respect to volume outlook for FY26 and 27. Management commentary on pricing trends, e-auction premium and realization will also be keenly awaited. But all in all, we are expecting a weak set, and lower volume growth is likely to weigh heavy on numbers this time.
All right, that's the take coming in on Coal India. Thank you so much, Ashesha, for all those details. But once again, let's take a look at Sun Pharma, because just a while back, the numbers did come out wherein because of the exceptional item this time around, the profits were lesser than what the street was penciling in. There was a 800 crores of exceptional cost. And along with that, if we look at some of the other internals, India business held steady. US formulation has seen a jump of just 1% on a YOY basis. But Mayuresh, what is your understanding on Sun Pharma numbers and Pharma Pack overall as well? Because of late, the counters were doing very well on the back of margin surprise by select large players. What's been your reading on the pharma space and specifically Sun Pharma?
No, so as you pointed out, Srishti, I think the numbers have been marred because of a lot of factors at play. And therefore, I think the specialty pipeline for Sun Pharma is something that is expected to do the trick over the next few quarters. So how does the specialty pipeline evolve? How do approvals come through? And what really transpires in terms of the monetization of all these aspects put together are going to be extremely key and critical for Sun Pharma. Obviously, I think the kind of R&D spends that Sun has done over the past few quarters and the pipeline that they have probably created, a large part of that drug pool is either in phase 2 or phase 3 trials. And therefore, I think as approvals start coming through the next few quarters, and hopefully with the resolution of the FD affected plant, there will be some element of sanity coming back in numbers and margin performance as well. And that's generally for the pharma industry as well. I think with some tariffs actually playing out and expected to play out, how approvals will take place and how branded generic companies are expected to perform is going to be extremely critical. So in our opinion, again, I think we are remaining very, very specific. Within the space, I think hospitals is a space that we continue liking. But within core pharma companies, I think stocks like a Cipla is something that we continue holding. Stocks like a Strides Pharma, which has given a decent set of numbers, is something that we continue holding in our global portfolios.
That's the take on some of the themes and stocks to talk about from the entire pharma, healthcare space, including hospitals. Let's move away from that and once again focus on earnings. And ITC is going to be the only Nifty 50 company that comes out with its numbers tomorrow. And here's what we're expecting on a standalone year-on-year basis. We're expecting a decent set of numbers this time around, steady set from ITC. Revenue is expected to come around 18,261 crores, a healthy uptick of about 7.5% on a year-on-year basis. EBITDA is seen at 6,417 crores, up almost 2% year on year. Net profit is expected to go up by 3.5% at 5,085 crores. However, in line with all FMCG companies except Dabur that we were just talking about, margins are seen to be under pressure at 35% compared to 37% on a year-on-year basis. This, of course, because inflation in leaf tobacco products, which is a part of their cigarette business, and other input costs are expected to weigh on the margins this time around. But if you specifically talk about cigarettes, volumes are seen at 4 to 5%. Cigarette sales are expected to be up 6% on a year-on-year basis, which is actually flat. EBIT margins are expected to decline, and FMCG revenue is expected to be up 4 to 5% year-on-year, while EBIT margins for that segment are expected to be at 6.8%. Talking about agri, we're expecting this segment to grow by roughly 10% on a year-on-year basis, and paperboards continue to remain subdued at just a 6% year-on-year growth due to tough operating conditions, weak export markets, as well as cheap competition from the Chinese supplies. EBIT margins for paperboard expected at 10%. If you take a look at these numbers adjusted for the demergers of the hotel business, ITC's like-for-like gross sales to EBIT growth is seen at 6.5% and 2.2% year-on-year respectively. So when the numbers do come out tomorrow, watch out for any commentary on cigarette volume trends, the product mix, competitive intensity, own brands versus other brands doing well, raw material trends, agri-business outlook, and of course the pricing strategy. So all eyes are going to be on that. But Mayuresh, give us a sense of some other sectors. Let's move away from FMCG. We've spoken at length about FMCG today. Something that's not doing all that well along with pharma and metal is the entire PSU banks, IT, realty, auto. These have not been doing all that well recently, but they've not been doing all that badly. They're somewhere in the middle. So other than this tariff one-off over the course of the last couple of weeks, it's rather been lackluster for auto names, PSU banks. What's your take on some of these sectors?
I think we remain extremely selective when it comes to the auto pack. And therefore, I think our take is that with the festive season expected to come round, expectations of commodity input costs actually remaining benign and expected to remain so, and expectations of volumes normalizing. I think a part of this recession will continue to be correct. And therefore, companies like Hyundai India is something that we continue holding. I think decent set of numbers. They've got a very strong show as far as the SUV market is concerned, cash-rich balance sheet. And therefore, I think a stock like Hyundai is something that we continue preferring, along with M&M, when it comes to autos as a space. For realty as a pack, again, I think the numbers are largely in line with what the street was probably assuming and believing in. With interest rate cuts expected to come through in terms of the borrowing mix for a lot of NBFCs, I think a proxy for real estate, which is NBFCs, and specifically housing finance companies, is something that we continue to prefer. And therefore, a stock like PNB Housing, which has a good mix in terms of not just the affordable segment, but even the emerging segment where the yields are significantly higher. They've got a very decent borrowing mix. The expectations in terms of their NIMs are expected to continue very, very strongly. And therefore, I think housing finance company as a proxy to reality, something like a PNB Housing, is something that we continue holding. Apart from that, our own sense is that we remain underweight when it comes to metals because it's highly dependent in terms of the entire China story. What happens with the China-US tariffs is anybody's guess. And therefore, I think how does this entire scenario play out is going to be extremely critical for the space as a whole. Even IT, I think the commentary thereof has been very, very mute. And we are very, very selective here as well. So I think a stock like an Emphasis and a Coforge is something that we continue holding in our global portfolios. Obviously, I think companies which will differentiate in terms of their products to platform offerings and what they probably do in terms of accelerated investment, specifically towards agentic AI, generative AI, is something that will probably differentiate these players. So I think being a little bit selective, but very selective on certain sectors and stocks will be most.
All right, so that's the sectoral picks and preferences coming in at this point in time. But with this, Mayuresh, we let you go. Thank you so much for taking the time out and speaking with us. But just a few minutes left for the markets to shut shop. It's been quite a news-heavy day and a lot of action on the markets as well. So let me just hand over to Ashesha to tell us that how did the market pan out today.
Well, yes, indeed, it was a news-heavy day. We did recover from opening lows, but gave up most of those gains by the end of today's trading session. Nifty is ending nearly 100 points lower for the day, near that 24,574 odd mark. Nifty Bank should also come up for you on your screens. That one is also ending with some amount of downtick. Nifty Realty Index down 0.5%. Nifty Banking Index, that one ending nearly 210 points lower for the day. In terms of individual losers, we had Adani Enterprises. That one was down 4%, the biggest loser on the Nifty 50 index, followed by Tata Steel. Despite reporting a strong set of numbers, that one was also weighed down because of the entire volatility that we saw in the metal space. Tata Steel down 2.5%. Dr. Reddy's also ending 2% lower for the day. In terms of gainers, we had HUL after reporting numbers and strong commentary that came in from the management. That one up 3.5%, the biggest gainer on the Nifty 50 index. We had Geo Financial gaining for the second day in a row, and Eternal is also ending with some amount of marginal gains. In terms of sectors, we had pharma sector, which was impacted the most on account of the Trump tariff announcement that came in overnight. Ipca Labs down 4.5%. Granules India also ending nearly 3.5% lower for the day. In terms of individual stocks, we had DCB Bank. In fact, this one I think is ending nearly 5 to 6% lower in trade after reporting very weak set of numbers. Asset quality has deteriorated. Provisions have risen nearly 71% on a sequential basis. DCB Bank ending 5% lower. Imami, it reported its numbers. Revenues were flat, but margins have come in at 5.2%. That one is ending nearly 6% higher. Geo Financial Services on the back of that fundraising plan, where the company is looking to raise about 15,800 crores, and Dabur also reported its numbers in the last hour of trade. So all in all, news heavy day, of course, a whole host of individual and sectoral news makers, but Nifty is ending near that 24,760 mark, 0.4% gone on that one. Broader markets are also under pressure today. But that's all the time we have on this edition of the show, but don't go anywhere. Your trades will take you through the next